What's up? I'm Dan Fredenberg, and this is another Chance Encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
Today I'm joined with Rachel Cohen. How are you doing today, Rachel?
I'm great. Thanks for asking, Dan.
All right, my pleasure. And I got some great news for you, Rachel. I don't know if you realize this, but today we are joined by my very favorite member of the audience. And why is my favorite audience member here? It's because this is a chance encounter where I talk to different people in the commercial real estate space. And that might mean deal sponsors, it might mean financiers, it might be operators, it might mean developers from the ground up. And you may ask, why would you do that? The answer is if you've ever heard of off market deals, private deals that you're not supposed to talk about publicly, they're sometimes called 506B syndications. Well, you should know that the SEC requires that you have documentation of your prior substantive relationship, or else they'll get ants in their pants and they'll ruin the party. We don't want that. And so I have people on here and we're discussing what many people call a suitability questionnaire, just finding out what's your level of sophistication, appetite for risk, core competencies as they relate to commercial real estate deals and all that kind of stuff. But before we get too excited talking about these different deals, Rachel, do you want to say a thing or two about yourself?
Absolutely. Thank you. My name is Rachel Cohen. I'm with House of Kings Collective, and I work with all types of people all around the world, which is absolutely incredible. I help people to mitigate risk and invest in opportunities that are good for them.
Mm-hmm. I love that answer. And of course, that's the first segment that we go through here is the five distinct motivations. Before I do that, I always say, but wait, check your rate. Rachel, I don't know how good you are with tech, but maybe you can see through the camera and down into the user's device down there. There might be this hideous subscribe button down there, and maybe they can. Oh, okay, it's a silly joke, but whatever. The five distinct motivations. I've now spoken to hundreds, possibly even over 1,000 different syndicators, people in this space now, and every single time I talk to them, it's important to find out what's exactly keeping you in this business. And everybody has their own unique why, but I find at the same time they fit pretty neatly into these five different categories. And the reason why I go through them is because these deals take months to close, they take years to go full cycle. And so we need some sort of indicator before we're partnering up that you have some sort of motivation not to throw in the towel if the going gets tough. The first motivation of the five is preservation of purchasing power. What's that? Well, some people, they don't have to have a job. The way that they pay their bills is from the proceeds of ownership. They have a portfolio of assets. The cash comes in because they're the owner. And then what happens is the question for normal people would be like, well, why would somebody who doesn't need to work, why would they go through the hassle of another acquisition? Well, there's two main situations where that'll happen. One of them is if inflation is rearing its ugly head. Well, that's going to eat away from the purchasing power of your cash flow. So it's going to be time to make another acquisition. The other times when somebody in this situation is going to make an acquisition is when there's distress in the property or there's an asset crash, something like that. They're going to buy at a steep discount, which is something everybody tries to do, tries to pull off. But of course, there's only so much you can do. Now, me personally, I'm not in this situation yet. It's not a preservation of purchasing power move that I'm up to. What I'm up to is trading time directly for wealth. And that's a little bit hard to understand, especially for youngsters, because they're thinking earn, earn, earn. But me, I've got a background in technology. Specifically, it's in the CRM space. So that's mass emailing. So I was sending out between 5 and 7 million emails a month for my old boss for years, and he was busy flipping 10 houses a month. And when I found out how much he was earning versus his tax burden, and then I was noticing me focusing on higher wage, higher salary as a tech person, and then I saw what my tax bill looked like, it hit me. It's time to pivot, find some sort of way where I'm rewarded for my effort in the form of deployed capital instead of ever increasing bigger salaries. So that's what I'm up to. But younger people, they tend to want to hustle like crazy right now so that they can fast track their retirement. Other people, they want to just take control of their schedule, have a little bit more time freedom. And that might mean working fewer months per year or fewer weeks per month, something like that. But that is a very valid reason for people to get involved in this industry. But of course, one thing that's funny, a lot of people who want to fast track their retirement, they think that secretly everybody wants to do that and they're just in various levels of hiding it. But I assure you that's simply not the case. Some people are just plain ambitious. They want to buy their entire hometown. They want that generational wealth to make sure that their great grandchildren never have to hold a day job. So they're going to forego retirement. They're going to be hustling into their 90s. And even though it may be vilified in some circles, the fact remains that we need people like that in this sort of industry because they're never going to throw in the towel just out of ambition. So it's fantastic. Just like the last group, they're not so much out of ambition, but they are similarly motivated to continue hustling into retirement age. But they've picked a sector of society, or maybe it's animals, maybe it's the environment. Who knows what it is? But if you want to make a really big impact on the world, then there's a financial component to that. And so some people are making their acquisitions for that reason. So Rachel, those 5 different motivations, what combination of them would you say describes you best?
Well, personally, I am trying to create a legacy for my children and my grandchildren, and I am trying to make sure that they're secure over the life of their over the time that they're around in this world. I want my grandchild, who was just born, by the way, about a month ago, to not have to do what I did. I want her to be, situated in a situation where she doesn't have to worry. So overall, I guess it's the legacy is what I'm trying to create.
I love that answer. I love that answer. But of course, it's pretty easy when you're going through these motivations to ignore the fact that there's risks involved in every business, and real estate is no exception. And if you've ever been involved in one of these 506B syndications, these off-market deals, then whoever the securities attorney in the mix was, and there should have been a securities attorney in the mix. If there wasn't one, you should run, you shouldn't walk. It's very, very important. You have to get that exemption when there's any kind of passive positions involved. But if you were, when I was going through this suitability questionnaire, this financial questionnaire that these securities attorneys insist that everybody fills out, I noticed that one question in particular lacked utility, which was the tolerance for risk assessment question. I felt that you couldn't really take the answer and use it and really have something meaningful. So I made my own version, which is a fill in the blanks question. There are many popular investment asset classes, but I think blank is too risky. So Rachel, it can be inside real estate, it can be outside real estate. You can do both if you want. What's too risky for you to invest in?
Personally, I don't look at anything below a C opportunity, C minus opportunity. I usually look at a B because that one you can still grow and you can still profit, but you're not looking at people doing drugs in the street and everything else under the sun on your property.
I absolutely agree. I love that you said that because, quite frankly, systemically, you're getting more and more people who, they just look at whoever is the owner and they see an enemy instead of a friend. And if that's the case, it's not really going to be a great place to deploy your capital, in my opinion. So I just love that answer. But this next slide here, this one I was originally going to avoid for the first few hundred episodes of Chance Encounters. I didn't include it. And the reason was because some people, their role is more of a public relations or a marketing role. They're a front of house sort of role. And so they're not going to really enjoy doing a deep dive into the numbers, figuring out in the underwriting, how can they make more upside just from a mathematical perspective. But at the same time, everybody who's involved in this industry, they have to have some sort of, like headline for how they pick one deal compared to another. And so So I have this slide where people can pick their top 3 or something like that. And for anybody in the audience who is just listening and not watching, I read out all of these different metrics. This isn't an exhaustive list. Different underwriters are going to be like, what are you talking about? These are all important, but we still need to simplify for some people so that when you communicate with my guests, you know what they're looking for. So let's go. The first one is cash on cash. Then there's IRR, cost per door, net operating income, which is NOI, going in cap rate, which is really talking about what sort of a cap rate are you buying for compared to what is the going rate for a similar property in that area. Next is the loan interest. That's particularly important if you're assuming a loan. Then there's the occupancy, which is the inverse of vacancy. It's the same thing, just inverse. Then we have average income, where the property is located, the amortization period of the loan, which is also especially important if you're assuming it. Then there's the market versus the in-place rent. So what's the difference between those two numbers? The population growth, where the property is located, so you have some baked in appreciation. The sponsor record, which is how many deals have gone full cycle and how many are on the go right now. Then we have waterfall, split, or exit strategy, which is what happens to your capital after it's been returned, or what happens after your capital's been returned, I should say. Then I have DSCR, which is debt service coverage ratio, which is how much of the revenue from rent is going out the door immediately just to pay for the loan. So Rachel, these 14 different metrics, do you want to pick like a top 3 or something? What are the ones that you really hone in on?
First of all, oh my gosh, these are all so important. You're making me pick just 3. I can't pick just 3, man. That's impossible to do. But if I were to pick 3, honestly, I would say for my investors, I would say cash on cash, because I get quarterly income from that. The cap rate going in has to be between like 6 and 10, so we can lower it. That's important, extremely important. And number 3 for me is occupancy, because occupancy determines how much money you're getting in each month for that property. That's extremely important. If your property is only 10% occupancy, you can't make any money. If it's at like 70% even, you can't. It has to be at least, I would say, 90% occupied, or just about, for me to even look at it.
Mm-hmm, mm-hmm. All right. So stabilized deals. I love it.
Yes. Yes.
All right, great. I'm eating up that answer like a delicious subscribe sandwich. It's my very subtle reminder there. It blows my mind every time. But it tells me it's time to pull out the Dan Does Deals Commercial Core Competency Cube with the 6 different roles in a commercial real estate deal. And the reason why it's so important to pay attention for these parts here is because I want you to be able to more effectively communicate on the subject of commercial real estate deals, because I think that your future in this industry is going to depend on it. If you can't discuss it intelligently and concisely, then you're not going to be able to get the financier relations and all that sort of stuff. And the more beautiful thing is you're also going to know how my guest fits into these deals by going through these 6 different sides. And if you're looking at this cube and going, wow, I really need to get me one of those, the good news is it's absolutely free. You go to dandoesdeals.com and there's this big conspicuous looking button you can click on, download it, and print it out. And I confess, I have committed the cardinal sin of marketing, which is you should never, ever, ever give away your freebie without asking for some sort of contact information. But it's important to me that it's really easy for you to print this out and practice it and discuss it with different people, because I think it's really going to make a difference in your career. So let's get started. The first person, the most obvious person, the most front-facing person in commercial real estate deals, those are the repositioners. Those are the people who they're doing the underwriting. They're choosing which property they're actually going to follow through on. So they're looking at a ton of different properties and doing a ton of different paperwork. Now, of course, the first thing they're going to look for is this property even actually making the amount of money that this broker / seller claims it is? Because okay, so the repositioner has to be on their toes. And one peculiar part of being a repositioner, like if you want to get into this industry, you're probably going to start up on the repositioning side. But the peculiar thing about being a repositioner is you have to have a lot of financier relations. You have to have a vast network of financiers, people who only deal with paper and money, and the owners of the building. They are not on the GP team. They simply are not going to be dealing with residents or anything like that. But the repositioners have to have a wide network of financiers, because if the repositioner can secure a more advantageous loan, that goes straight to the profitability of the building. So they're always on a lookout for cheaper money. So that's what's going on there. But the repositioner's next place to look to find some upside is going to be the operations, to stop those Benjamins from going down the toilet. Of course, there's more to operations than just unclogging toilets and collecting rent and mowing lawns and shoveling snow and all that kind of fun stuff. If you're like me, my technical background has meant that I'm there to contribute to a GP team on the automation side, the web asset side, and whatnot. But the bigger one that I think is too frequently overlooked is that even if you're dealing with bigger properties, like I tend to focus on, so 100 units or more is what's preferable for me, the operations might be outsourced to a third party a property manager. And if you understand that this industry, the enemy is vacancy, okay? If you've got those empty units, they have to be filled. And so somebody on the GP team is going to need some serious marketing chops to get those units filled, even if the property manager isn't following through. And that's one of my bigger contributions to operations. But there's only so much you can do in operations to optimize. So the next place the repositioner looks is getting a contractor team involved. That's to do a value add, to upgrade the property, make it a nicer place. The entire idea being, if the place is nicer, the next resident should be happy to pay more in rent than the previous one, and there's some baked in upside. Now, of course, if only it were that simple. You still need a return on investment. So I would not advise that you gold plate the toilets, because that's not really going to be the sort of amenity that's going to make your residents really willing to pay more in rent. So what you have to do, if you're like me, I don't know if you realize this or not, but I'm from the internet. So that means I need locals. I need boots on the ground. I need somebody who can be there in an hour or two to keep an eye on the contractors, make sure they're not dragging their heels, they're not using subpar materials, anything like that. These locals have to be there in an hour or two, but I'd be stuck at an airport in an hour or two. So that local job is definitely not going to be me. But the local also has to keep an eye on the operations. But when the repositioner, you know what, let's make this a hypothetical. Let's say you become a repositioner. Maybe you're an engineer or a physician or a pilot or an attorney, something like that. And you get this idea in your head. You think, hey, I know how to buy a house. You know, you put down your down payment, you borrow the rest. Well, if I want to take over that 350 unit apartment complex that's just down the road, maybe I can get my circle of friends, each pitch in, 100K or something like that, and we can take it over. Well, when you and your pals turn around to the financiers and say, hey, I want to buy this building, it's tens of millions of dollars. Do you have, I don't know, say tens of millions of dollars that you want to lend us? Well, there's one little flaw in the plan, and if you're in a mentorship or a guru program, I encourage you to listen very carefully to this next part, because the financiers, the banks, are going to say, who's your sponsor? Who's your KP? Now, what's that all about? In order to be eligible for a commercial real estate loan, somebody in the fold has to already own a similar asset, because that's how you're going to prove to the bank that you're not just going to run the property into the ground with all of their own depositors' money. So that is why you're going to have somebody who already knows the business, who already owns a similar asset, before you're going to be eligible for that commercial loan. But on top of that, you need a certain amount of liquidity among the GP team. And then for collateral, you need a balance sheet of at least the amount of the loan among the GP team. But if you got all those pieces, you got yourself a commercial real estate deal. So Rachel, I know that you have some repositioner jobs. I know that you have lots and lots of financier relations, and then like obviously there has to be some sort of asset management role, or you have to have a fund or something like that. But I don't want to put words in your mouth. Rachel, what are the boxes that you're most likely to check in your next deal?
Well, first of all, you need a sponsor. That's 100%. You need a KP or a KP, whatever the amount of the loan is. You need some directors of marketing. You need some securities attorneys. You need asset managers. You need everything that you mentioned. And then you also need the team to work together well. That's important, extremely important. So I have a team I work with. I never work alone. That's impossible in what we do. So exactly. I'm also on the internet. I'm also all over the place and I make so many contacts, but I definitely have a team. So that's very important. It's a team sport, I guess you'd say.
Mhm. I love it. I love it. And so that's how you check all the boxes. So let's talk about
Yeah.
the buy box then. So when real estate people are talking to each other, say, hey, what are you looking for? What's ideal for you? What's easier to say yes to, more difficult to say no to? We're really asking about three main things. First one's geography. Where is it? Which state? Which county? Possibly even which neighborhood? Okay, that's going to be on that list for ideal. Second one's going to be size. And most of my guests on this show are in multifamily investing, which is apartment complexes. And the way you define size based on apartment complexes is the number of apartment units. And the reason why it's important to know that size is because the type of group that's going to take over 10 and 15 unit apartment complexes, they're going to be fundamentally different from the ones who take over 150 unit apartment complexes and so on. So that's but in other forms of commercial real estate, it might go by acreage or square footage, but the same idea applies where that size is going to matter because of the team is going to be fundamentally different. But the third one is usually called class. I'm not crazy about that term personally. I think it should be desirability because no matter what, it's two completely separate parts that are bundled into this label class. The first one is condition. The second one is area. When you're talking about condition, it's how old is the building and the property, how beat up is the building and the property, and then of course, what sort of luxuries and amenities are there? Is it really no frills, or is it a place that has tons of wild things that makes residents happy to live there? That's the condition. Now, if you're talking about the area though, since we're talking about residential, which is multifamily more often than not, the school districts where the property is located is going to be very, very important. But every type of real estate, the crime rate's going to be important. And then the other one that's always important, a lot of brokers use the saying location, location, location. Personally, I think that that's not very descriptive or informative. What I think they actually mean is traffic, traffic, traffic. If a gazillion people pass by a property every single day, it's going to be more desirable for that reason alone, and therefore it's going to have the higher rank. But both the area and the condition are ranked the same way as in grade school. So you have A plus at the top, then it's A, then it's A minus, then it's B plus, and so on. So Rachel, as far as you and your group goes, I understand that at the end of the day, if you're not the KP sponsor, you're somewhat dependent on the sponsors themselves and what they're interested in. But as far as you and your organization goes, what's easier to say yes to?
Well, first of all, we work in the Sun Belt, which is the eastern coast all the way up Texas, Florida, the whole Sun Belt, I guess you'd call it. We look at the size of 100 plus, and our strategy usually is B area, like I said before, C property that we can bring up. Usually is 1970s or newer. Obviously, that depends on whether it's been renovated or not. A lot of things come into play on that. The condition is very important. How much money we had to contribute to add value to it comes up. We are add value team. So when you're an add value team, obviously you don't want to be in A network area because you can't really add much value to A. But if you're in B or C, obviously you can move it up. And it's just like in grade school, like you said, if you're in a D location, you can't really do much about it. They're stuck there. But when you get to C, B, and A, there's a difference in B and C. I know I'm talking numbers and letters now. I'm sorry, guys. But the class absolutely, absolutely does matter to me. And it does matter whether you can fix it up and make it a better value. So that's very important. When you look at the districts of schools, the schools are also based on the location. So everything, like you said, location, traffic, whichever you put it, like however you make it sound like, it all matters when you're buying a property. For me personally, I love the Sun Belt. And I think that everybody comes to the Sun Belt. I'm going to repeat it again. People retire in the Sun Belt. People love it. They do all sorts of things in that area. So with that said, that's my final answer.
I love it. I love it. So that's the deals themselves. Let's talk about people. As Rachel mentioned, it's honestly my favorite part about commercial real estate is that because it's multifaceted, it's a team sport. You're not going to be all six sides, all six different roles in a deal for any meaningful amount of time. Instead, you're going to hunker down down on a couple of different roles and do really well at those instead. But at the same time, even though we're also eager to make introductions, to build new teams, even if we're not on them, make these referrals and whatnot, we all have our own unique skill sets. And because of that, we're going to be better off or better suited to help some people more than others. And of course, everybody in this industry is in the business of deploying capital. So the financiers are essential to everybody's business. Me personally, though, the sponsors and KPs, I'm always most eager to speak to because after all, I'm from the internet. And so if I'm going to be a really disproportionately big difference in somebody's business, they have to already have a business to speak of. And that's what the sponsors and KPs have put together. So that's who I'm eager to talk to. Rachel, if you have any 506B deals, don't go talking about those. If you have a 506C, go ahead. But
Yeah, thank you.
right,
Thank
exactly.
you.
But as I said, everybody's looking for financiers. But who are you best suited to help?
Right now, I have a 506C opportunity. It's 101 units. It's in Texas, Corpus Christi, and it is a 506C. So it's accredited investors, excuse me, at a minimum of 50,000. And that's an add value. It's in a B area. It's a C property, 1974. It's a vintage of 1948 redone. It's really got to get into the details of it. But the property itself it comes to 60,000 a unit. You can't find that right now.
Mm-hmm.
It's actually pretty incredible, and the add value is coming in. And the gentleman that we're buying it from, just so you guys understand, was at 10% when he bought it. He put $2.2 million into it, and now it's at 94%. So we're taking it over at 94%, which is a big deal to me.
Mm-hmm.
Also, I have one other deal that I can talk about. It's a smaller deal. I work with another sponsor, and in that deal, it's a 38 unit. And that one, basically, all we have to do is change out the property management team and raise the rents $150 per door, which is actually, in this industry, pretty incredible. The gentleman that owned it before, we got it direct from seller. Straight from him. His wife was sick, and a lot of times these properties come to us by way of from seller. That's the best way to get it. You don't want to go through the process of them putting it on the market and then taking it over. That causes a lot of hassle. So we look for properties that are off market, direct from seller, and we give the money back to our investors. That's how we help our investors to make money. I don't know what else I can say on here other than please, connect with me if you're interested. I do have opportunities out there, especially in the Sun Belt. I do have that one opportunity in Arizona, and I always have more coming in. So I would love to talk to anybody that's interested in investing in the future.
All right, perfect. And so let's talk about how to reach out. Me personally, I'm going to hijack the conversation first. I got this really distinct last name right here. It makes me really easy to find, especially on LinkedIn, which is a social media platform where I spend most of my time. But if you are looking to learn some more, I've got some books available on Amazon.com. Again, use the same name. Some of them are about real estate. Others are about business in general. But if you are involved in these different investments, syndications, all that kind of stuff, especially if you're taking on passive investors, I highly encourage you to grab your phone. You can pause the video and scan this QR code because that goes to the FAQs page of 506BME, which is the platform where I offer the IT services of maintaining your documentation and showing you how to build something that the SEC will be very confident that you did your due diligence in finding out somebody's background. But more importantly, I really want to ask people if your laptop falls into the bathtub or something like that, like, are you going to still have your documentation? And when the SEC audits you, do you have that proof that you had that substantive relationship before you started pitching your deals? So that's what I have. But Rachel, if people want to reach out to you, I see that you're active on LinkedIn and whatever, but maybe website, email, phone, what are the best ways to reach out to you?
Absolutely. My name is Rachel Cohen, just so you guys know. House of Kings Collective is my company. So I have houseofkingscollective.com. But the best way to reach me is LinkedIn. It's Rachel Cohen, plain and simple, Rachel Cohen. And we can talk. Just leave me a message, connect. I would love to talk. I also have a podcast, by the way. I don't know if I can talk about this, but I have a podcast. It's called House of Kings Podcast Doctors Edition, and I interview doctors and show them the way to talk about their path and how I can help them. So if anybody's a doctor out there listening, I would love to talk to you. Anybody that's looking to get into investments, I have the opportunities. Please reach out. Don't hesitate. I'm here. And my phone number is, please take this down, 561-888-3047. Again, 561-888-3047. If by chance I don't answer it, I will call you back. I always look at my messages and I always look at the numbers to call. So that's all from me. Thank you so much.
Beautiful, beautiful. And that brings me to my public service announcement. You mentioned doctors. I'm not sure if they'd really be on board with this because I'm not a health professional, but I still do this public service announcement anyway. If you've been watching this episode and experiencing searing pains in your eyeballs, maybe like migraine, like something, I'm confident it's because of the downright hideous subscribe button right down there, and you can get rid of it for free just by clicking on it. Full disclosure, I want people to click on it because if enough people do, then YouTube will actually start to pay for these videos instead of me. I think that would be amazing. And the trade-off, just so we're clear, is my videos may show up on your list of suggestions, but you can quite frankly just go ahead and ignore those suggestions. I just appreciate the fact that you spent this time with me. Just like Rachel, I appreciate you joining me today. This has been great.
Absolutely. I love this. This is great. I love the interaction, Dan. It's amazing.
Awesome. Thanks. Hey there, are you interested in commercial real estate deals? Would you like to build your network of investors and deal sponsors? Well, the best thing I can do for you is have you appear on a chance encounter interview as featured on dandoesdeals.com. You may know me from 506BME or as a top commercial real estate voice on LinkedIn. And if I had to think of the top factors in your success in commercial real estate, my top two would be your network and your ability to effectively explain how deals work with effective communication. The 15-minute chance encounter format, it checks both of those boxes, and they ensure that you can share your private deals with me without the SEC calling it a public solicitation. So hop onto LinkedIn. You can see my name is over here, Dan Friedenberg, and search for my name. And the best way to reach me and book that is to message me through LinkedIn. And don't worry, it doesn't matter if you decided to enter this space just last week or 2 weeks ago, or if it was decades ago. It'll be fun and easy to look good. We're just asking multiple choice questions based on your core competencies you look to contribute, your level of sophistication, all that kind of stuff. So I hope to hear from you soon. Thanks a lot. Bye. Make sure you 506B me. Any syndicators, make sure you 506B me. Hi. Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506BME?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506BME, everybody.